Hi traders, I want to talk a little bit about market cycles today, and I'm going to try to be brief, but I'm going to try to cover it as best as I can, as quickly as I can. Now, of course, I know those of you who are very familiar um, with the market maker method, maker's pattern. So, of course, you know that that is consolidation, a stop hunt, um, and a trend continuation. However, there are other cycles as well, but first let's just start with the market maker methods pattern. So what we're going to do is we're going to take this particular pivot, swing low, and we're going to call that our peak formation low. Okay, PFL for short. All right, so here we have our peak formation low. Let me make that a little bold so you can see it. Okay, peak formation low. So we know at any particular point from here, we should look and anticipate a stop hunt to that particular peak formation. Okay, great. So as we look at the market and how it moves away from the peak formation, we have moved into an area of consolidation. I know all right, excuse me. We've moved into an area of consolidation. It's lightly shaded. Maybe if I put a border around it, maybe you could see it, that I have it highlighted somewhat. Okay, so here we have an area of consolidation. So of course, price moves up into this area of consolidation, hits up to the top of this established range based on the swing low and highs back here in the past, gives us price elevates into this area of consolidation, but it hits the top of this range, presents us with a stop hunt, and then it continues on away from peak formation low. That is the trend. Now, of course, that is just sort of part of one cycle. Of course, okay, so what if we look at that cycle and it's repeated? Okay, so we left one area consolidation, got a stop hunt low, traded into the next area of consolidation, which is dictated by historical price action. Trades up into the high ranges. Basically, what you get is an ABC move back to the bottom of this particular established range of consolidation. So you had consolidation, a stop hunt, trend continuation outside of the range, back into another area of consolidation. We got a stop hunt back down, trend continuation. That is a market cycle. Those of us know it as a daily cycle. What I just presented was a weekly cycle. This particular cycle happens on different time frames. It just all depends on what time frame you want to trade it on. Now, of course, I showed you the intraday market maker cycle, which is consolidation, stop hunt, trend continuation. That can be utilized in an intraday. Actually, it could be utilized on a scalp if one were to do so. You can find this pattern on, if you're a scalper. You can find this pattern if you're an intraday trader. You can find this pattern if you're a swinger. You can also find this pattern if you are a position trader. This particular pattern plays itself out more times than you even know. And even if me breaking this down the way I did, this still results in one big pattern. Because what you have is you have a consolidation that starts this whole gesture off. You get this initial stop hunt, and then the market continues to trend away. So that's how you can look at this even on higher time frames. So this is understanding market cycles. Now the question you might want to ask yourself is, how could I trade those market cycles? Well, that's a good question. Thank you for asking, Earl. Alright, so here you are. You traded from a low. This first dollar sign, that would be your initial safety trade. Not a daily safety trade, but just a safety trade of this particular cycle that I'm talking about from a swing trader's perspective. I enter here at my initial safety trade, which is set up by pattern, time, and price. If you don't know what I'm talking about, you can check that out on the other video titled High Quality Setups or a Combination of Pattern, Time, and Price. So we have pattern, time, and price. Structure was broken, which is established by this case of lower highs and lower lows. Structure was broken. Set up your safety trade. You trade from here. Get out here. This impulse phase is now over. You're in a correction phase. Now you can either do one or two things. When you check out here, you can ride this down to this point. But if you're a trend trader, you check out here, wait for this to play out, get your confirmation candle, then you enter. You ride this to this point. You check out here, enter here, ride it up to here, check out here, ride it out or trade it, enter here, and then ride that. That's how you would successfully enter using market cycles. You don't have to sort of just hop in willy-nilly. You can actually, if you understand market cycles, you'll know exactly where you need to get in at when the market presents itself. But first, one has to understand the cycle. Once you understand the cycles, then everything else becomes elementary. I certainly hope that this video, as short as it was, I did really want to keep it brief. I hope this little bit of information you find helpful to you. I certainly hope that you get added to your trading. When you do your markups, this is something that you certainly want to train your eye to see. I'm going to leave you with the thought of, one, certainly make sure that you have your charts marked up in preparation for the upcoming trading week. 2, make sure that you read at least one chapter of the current book that you're reading. And 3, most importantly, I want you to spend some quality time with friends, families, and other loved ones. So on that note, I hope that this has been useful to you. I hope you find value in it, and I wish you well. And on that note, I am out.